Well, hello, everybody. Welcome to the third part of our series on quantum economics. This episode is called The Person from Porlock. And that's interesting because that person interrupted Samuel Taylor Coleridge when he was composing Kubla Khan, which is a poem filled with the fuzzy logic, probably of drug-induced creativity. And thus the poem was never finished. As you will see, the person from Porlock interrupts our harmonious musings about quantum economics in this episode and plays something of the same role, but gets contested. Now, let's go back and resume what quantum economics actually says. It says first that we perceive of our existence and our future in terms of Newtonian mechanics. That is, apples falling off trees and bumping off our heads, without recognizing that actually gravity is about us moving towards the apple as much as the apple towards us. Newtonian physics are the laws that govern big objects, from tennis balls to spouses to tables and to chairs. These objects are conceived of as being stable, logical, and coherent because they are big and warm. They do not behave in a quantum mechanical way. As big objects are all we see and all we envisage when we think about ourselves, our history, and the future, it appears to us that the whole world is governed by the laws of big objects. It is, for example, the basis of Euclidean geometry, but that logic is completely false. We ourselves, that is, as it is now scientifically proven, are quantum beings. Our universe is quantum. The big objects are constituted of quantum parts. The sun would never shine were it not for quantum physics, and we wouldn't be there at all. The laws of quantum mechanics are contradictory to Newtonian physics. The logic is contradictory, fuzzy, and mechanical, with objects, for example, being in multiple states, multiple locations at once, like Schrödinger's cat. Why would our big, stable, and coherent Newtonian framework, which is wired into our brains like chips, be fit for purpose, certainly for forecasting the future, if we are quantum beings and our environment is quantum too? The answer is they would not be fit for purpose. What quantum economics seeks to do is to apply the incoherence of quantum mechanics to how we think about our existence and about our future. Let's apply this in a practical kind of a way. Consensus forecasts are seamless. They are patchwork quilts of flawless logic without ragged edges, and each little square contains goodies. The history of crisis proves that these forecasts are useless because they are disrupted by a single square or multiple linked squares, tearing them to bits due to a logic which is inherent within the modular structure of those squares, but not in the whole seamless patchwork of the seamless coherent forecast. Let me take this down another level to our own forecasts for the world in the next couple of years. We think the dollar is going to fall, but US interest rates are going to rise. We think stagflation will return and growth will remain very low. And we think that the renminbi, the Chinese currency, after a short period of quietude within this period, will fall by at least 10% against a falling dollar. Now, this is the point at which the man or woman from Porlock intervenes and asks, how can the US dollar be weak if US interest rates are rising? And how will inflation return if growth is low and output gaps never close? And how on earth is it possible for the renminbi, the Chinese currency, to fall if the dollar is also weak? What quantum economics says is that this can happen. All of these things can happen. Every module of this forecast, every individual piece of it is consistent within itself, but the whole is not consistent. The whole is disrupted by the individual parts. This is the coherence of incoherence. Indeed, a very quantum economic or quantum physical phenomena. Let's go through how this would happen. The dollar can fall because people will flee fiat currencies because they are being vilified by central banks. It will happen first in the United States because most economic things do. And people will move into alternative assets like, for instance, cryptocurrencies, agricultural commodities, gold, and I can go on. The Chinese government, which has a policy of replacing the dollar in terms of its use for international trade and as an international reserve currency, will demand less of the dollar as it substitutes other things for it. So, in a reality, the dollar can fall while US interest rates are rising because global demand for it will fall. Inflation will come back not because output gaps are squeezed tightly shut, but because the legacy of COVID will be big, inefficient government. It will use handouts to buy political votes of people who otherwise would vote for even more populist, unpalatable alternatives. It will make zombie corporations survive, zombie corporations or corporations which have no message for humanity, but they use up resources in an inefficient manner. And finally, of course, the same governments will in themselves have enormous debt burdens and budget deficits, which they will fund through central banks, and which by nature of the way the government operates will result in a kinder but a much more inefficient society. Perhaps the final building block in all this is the reversal of globalization, which brought global prices for manufactured goods down for 20 years, and which the increasing isolation of China will make impossible to continue. So we revert to a form of national economic policies, and these national economic policies are always higher inflation than the globalized alternatives, which again brings us full circle to the renminbi. The reason the renminbi can fall, even when the dollar is falling, is because the Chinese authorities will have no interest in maintaining the value of the renminbi once they wake up to the fact that the Cold War between the West and China is set to continue. China is set to become increasingly isolated, not only in terms of international trade, but in terms of the flow of technology which China needs in order to meet its growth and societal targets. So you can see that every single part of this forecast is in fact logical and coherent within itself, but it disrupts the comfortable framework of consensus forecasting, which are themselves, of course, always logical and have no frayed edges. But if there were no frayed edges, if there was no disruption, there would be no crises ever. There would not be a debt crisis. There would not be a COVID economic crisis, because all these things would be within the forecast of consensus and would not be surprises. The point about quantum economics is that it copes with the sort of surprises that makes our world inherently stable, and therefore is the world that investors and people interested in the future of society at all should think about first. Thank you.